Could October 30 be the real financial Halloween? I mean, forget the spooky stuff on the 31st, but what if Labour's new tax plans could drastically change your financial future? We're talking about potential hikes in capital gains tax, changes in the ISA, and also changes in the inheritance tax. With the Halloween budget on October 30th, Labour Chancellor Rachel Reeves is set to unveil tax policies that could significantly impact investors, pensioners, business owners alike. Now, these tax changes have been talked about so much to the point that there's a lot of anxiety, there's a lot of anticipation in the air, and it hasn't been helped by the announcement by the government that they found a £22 billion financial black hole in government finances.
It means, Mr. Speaker, that we have inherited a projected overspend of £22 billion.
And how do you feel that everyone is thinking taxes? So everyone from investors to everyday savers are on edge. The fear is that to plug these said gaps, Labour might significantly raise taxes, hitting especially those who are trying to secure their financial future the hardest. Many doctors and healthcare professionals, especially NHS staff, are already feeling the strain from rising inflation, wage stagnation, and the dreaded 60% tax trap, already causing enough financial headaches. So could these new tax plans make things even worse? And what can you do about them? In today's episode, I'll break down how Labour's potential tax changes could impact your financial well-being, focusing on three main areas: capital gains tax, ISA, and pensions. I'll also share practical steps to consider, so stick around for the full breakdown. Hey everyone, if you're new here, I'm Dr. Egwim from MoneywiseDoctor.com. I founded Moneywise Doctor to help doctors and healthcare professionals make smarter financial decisions. Today, we're going to dive into the upcoming changes that could affect us not just in 2024, but in 2025 and beyond. So, if you're ready, let's just go straight in and pick them one by one. I'm happy to get your questions in the comments. If you have anything you'd like to clarify, I'm happy to answer them in the comments as well. And if you're in a hurry, please use the timestamps below to jump to the sections that matter most to you. Now let's go straight for number one, capital gains tax increases. So capital gains tax, or CGT, there's a potential that it could be rising. If you don't already know, CGT is a tax you pay on the profit from selling an asset. For instance, if you sell a property or stocks and you make money, you pay CGT. Currently, basic rate taxpayers pay 10% on assets they sell or 18% on residential property, while higher rate taxpayers pay 20% or 24% when they sell residential property. However, Labour has hinted that they might increase CGT rates to align with income tax. So we're talking 40%. So potentially, if CGT could go up to as high as 39%. Example, let's say you bought a rental property at £200,000 5 years ago and is now worth £300,000. Under the current rules, as a higher rate taxpayer, you probably be paying around £10,000 CGT. Let's not do so much public math. But if it goes up to 39%, you could be paying as much as £39,000. So that's quite a bit. Now, it's not just property. Stocks are affected too. If you've been investing in the stock market and decide to sell your shares after seeing significant gains, you face this same tax increase. Now, let's look at number two, our beloved ISA. So what's the threat to ISAs? Now, Labour might introduce a cap of £100,000 or whatever on the ISAs. While nothing is confirmed, the mere mention of this has already sparked a lot of anxiety among savers and investors. If you're using your ISA as part of your wealth building strategy, you could find yourself restricted, losing one of the best tools for tax-free growth. Imagine this, for instance, let's say some people have been taking full advantage of the ISA allowance for several years, let's say 10 years. So let's say you've been taking advantage of your £20,000 and it's £9,000 for junior ISA. If you've been doing this for 10 years, you could already have about £200,000 or a bit more, not even considering the investment growth that could push it higher. So we've already seen some ISA millionaires in the country already, in the UK. But if Labour caps the ISAs or maybe introduces some sort of capital gains tax on the growth of the ISA, let's say above £1 million, that might also restrict your ability to grow your ISA tax-free. Number three is business asset disposal relief. Now let's look at an important one for business. Business asset disposal relief. I'll give you an example. Recently, eConsult, a health tech company we all know, especially if you're JP, was sold to Huma. And while the price of sale was not made public, it's estimated to be about 40 to 50 million pounds. So this is where the BADR comes in, formerly known as Entrepreneurs Relief. This relief allows business owners to pay just 10% of capital gains tax on the first £1 million in gains when selling their business. But this was 10 million before, but now it's 1 million relief. But Labour could scrap this altogether. For example, if you're a doctor selling your dental practice, or you're a dentist selling your dental practice, or a health tech startup, you manage to sell it for 2 million quid, the first million is 10% tax you have to pay. But if Labour scrap this, then you probably might see yourself paying above on your startup or business that you sell. I know, it sounds like a lot of money, but remember they might have been building it for 20 years or thereabout. Anyway, let's look at number 4. It affects more of us. Pension contributions and income tax relief. This is one of the most anticipated changes, is a curtailment of income tax relief on pension contributions. So right now, if you're a higher rate taxpayer, you're benefiting the most from this tax relief. But if Labour reduces the tax relief or introduces a flat rate system, it could go down from 40% relief to 30% or even less. What does this mean? Currently, if you're a higher rate taxpayer, you benefit from 40% tax relief when saving into your pension. But under Labour's potential new rules, this could drop to 30% or even a bit lower. It means that you lose out on saving a significant chunk of your pension, tax that you'd have been taxed on your pension, because when you put in money, you get that tax relief. For example, if you're saving 10,000 into your pension, you currently benefit from, let's say, £4,000 in tax relief if you're a higher rate taxpayer, because it's 40%. Now, if Labour implements a flat rate relief of 30%, you only receive £3,000 in relief. And this might not sound like a huge difference, but over the years, think about 20, 30 years of working, it can add up quite a bit, especially for high income earners. Alright, number 5, the inheritance tax changes. Right now, pensions fall outside your estate for inheritance tax purposes, and it allows you to pass it on tax-free to your family. But Labour might bring the pensions into the scope of inheritance tax or reduce tax-free pension withdrawals. This would be a significant blow to those planning to leave some wealth to future generations. So these are a few potential changes. Remember, nothing is confirmed till October 30th. But what can you do even with all this? 1. Don't panic. While these proposals might be worrying, it's essential not to make any rash financial decisions before the full details are known, and we'll be telling you when it's known. Most changes likely will come into effect, maybe by April 2025. Now, number 2, review your investments and your pensions. If you are thinking of selling property or stocks, now might be the time to do it before any changes take place. Again, not financial advice. Consider consulting a professional financial advisor, specialist, if you are concerned about potential tax changes. This might be a good time to speak to a specialist financial advisor who specializes in dealing with doctors and healthcare professionals and understand issues that affect us directly. But what's really important, you need to stay informed, keep an eye on the news, subscribe to the channel. Knowledge is power, especially in uncertain times. Now, basically, in conclusion, the UK tax landscape could be changing drastically, but with careful planning, you can protect your financial future. Be sure to subscribe for more updates on labor tax plans and other, personal finance topics that could help you. And if you're thinking about pensions or something that might be helpful, check out my video on SIP and NHS pension on the channel. Also, if you like a free summary of all these tax changes when it's announced, you want a free summary and a breakdown that can help you understand it clearly and what it means for you. If you head over to moneywisedoctor.com/subscribe, then that will give you access to my free weekly newsletter where we'll be summarizing all these changes and breaking it down to the way that it actually affects you as a doctor or healthcare professional. Again, it's moneywisedoctor.com/subscribe, and you can get the links in the description and in the comments as well. Well, it's been lovely to speak with you again this weekend, but just to be clear, this video is not professional financial advice. If you need to consult a financial advisor who specializes with working with doctors and healthcare professionals, head over to moneywisedoctor.com to arrange a free appointment with one of our vetted specialists. All right, then. If you got any questions, if you got any comments, or what do you think that might happen with these new tax changes, I'd like to hear it in the comments below. If there's something you didn't understand, you want some clarification, or even if it's not related to this particular video, but it's something related to your personal finance as a doctor or healthcare professional, drop me a comment and I'll be in the comments in the YouTube section replying. All right, then. Bye bye.